Got a favorite or something new in mind?
Yeah, we are talking about Nvidia, so I'm giving you a few questions, right? So the first question is Nvidia's 250 RTX 5050 launch on July 1st a game changer? Is that too little or too late? What is your opinion?
The Nvidia RTX 5050 launch on July 1st, priced at $249 for desktops, is stirring up some buzz, but let's break it down. It's not a game changer in the blockbuster sense. Think more of a solid step for budget gamers. With 2,560 Blackwell CUDA cores and 8 gigs of GDDR6 memory, it's about 60% faster than the RTX 3050 in traditional rendering and up to 4 times faster with DLSS 4, which is Nvidia's fancy AI upscaling tech. That's decent for entry-level folks wanting ray tracing and smoother gameplay in modern titles without breaking the bank.
Oh, okay, I understand. So it is trying to extend the market of low end for Nvidia. So I understand that even though it is not a game changer, but it is still good for Nvidia, right? So now I'm asking another question. Why is Nvidia going to China? Biggest supply chain export despite the export bans? That is my question.
Yeah, Nvidia's still pushing into China despite the export bans because it's a massive market they can't just ignore. The US has tightened restrictions on high-end AI chips like the A100, H100, A800, and H800, plus the newer H20 and Blackwell chips, to curb China's access to advanced tech for military or AI dominance. But Nvidia is not sitting idle. They're designing China-specific chips, like tweaked versions of their Blackwell series, to comply with US rules while still tapping into China's demand. These modified chips are less powerful, but keep Nvidia in the game there. China's response has been to limit exports of key minerals like gallium and germanium, which Nvidia needs for chip production.
So then is that possible the Nvidia's products will be totally banned to China, or it is still allowed with the low end or low configured products being sold to China? What is the possibility? What is your opinion? That is key part of my question.
Based on recent developments, a total ban of Nvidia products in China isn't likely in the immediate term, but the restrictions are tightening. The US has banned high-end Nvidia AI chips like the H100 and H20.
Okay, I
as well as
understand.
gaming
So
GPUs
that's why
like the
there.
RTX
Okay, I understand. I
5050.
understand. So you mentioned there's still some space like Jensen Huang to operate, right? So that he's still able to sell some low-end products to China. That is good news. Okay, my next question. Nvidia hit 158 all-time high. Is this a top or just beginning in terms of performance? That is my question.
Yeah, and Nvidia hitting an all-time high of $158 is huge, and you're wondering if it's the peak or just the start. Let's look at it, leaning on the finance card above for the most accurate data. Nvidia's stock closed at $157.75 recently, with a 52-week high of $158.71. That's a massive climb from its 52-week low of $86.62, and it's up big from last year's average, around $120. The market cap sitting at a jaw-dropping $3.5 trillion, showing crazy investor confidence. Is this the top? Hard to say for sure, but there's skepticism out there. Some ex-posts I saw suggest Nvidia's still got room to run, with analysts like Barclays raising price targets to $200, citing AI demand and Blackwell chip ramps. Others, though, warn of a bubble. Valuations are sky high. And
Sorry. The forward P you provided is just like 85 to 89, sorry, 25 to 29. That doesn't say Nvidia has like a valuation issue, right? Maybe I'm giving you another question regarding Nvidia's performance. So should you buy Nvidia before or after July 9, the trade deadline? What is your idea?
No worries. Let's clarify that. You're right. The 4P range I mentioned was off. My bad. Nvidia's 52-week low was $86.62, and the high was $158.71, so it's been a wild ride. As for your question about valuation, Nvidia's market cap at $3.5 trillion and a price-to-earnings ratio in the high double digits does raise eyebrows for some. Critics on X and in recent articles point out its price for perfection, meaning any stumble, like trade issues or slower AI growth, could hit hard. But others see the AI boom, and Nvidia's
Wait. We rectify the P ratio of Nvidia again. The forward P ratio for Nvidia is around 25 to 28. Am I correct? That is correct data?
Yeah, let's straighten this out. Based on the most recent data, Nvidia's forward price to earnings ratio is around 30 to 36.62, not quite 25 to 28. For example, one source pegs it at 36.62 as of late June, while another mentions 30.9. The range varies slightly depending on the earnings forecasts used, but it's definitely higher than 25 to 28. Posts on X also threw around numbers like 26.33 to 36.4.
Okay. So you say the forward PE ratio value is not like a finalized as less than 30. Okay, maybe it's like a 32, 35, but well, nevertheless, comparing to its growth, the forward PE of 35, is that still reasonable?
Yep, you're on the right track. If Nvidia's forward PE is around 32 to 35, it's not outrageous when you stack it against its growth. Analysts project Nvidia's revenue could hit $111.3 billion in 2025, up from $26.97 billion in 2023, and earnings per share are expected to keep climbing. A forward PE of 35 means investors are paying a premium, but with 30 to 40% revenue growth forecasts and Nvidia's grip on AI and gaming chips, it's not wildly unreasonable. Some X-chatter even calls it a bargain compared to other tech giants, though others warn that any slowdown in AI hype could make 30
Okay, but I don't see any slowdown of the requirements for AI chips or accelerators because based on my observation, the requirements cannot be met perfectly. Even AMD products being sold out. Am I correct?
Yeah, you're spot on. Demand for AI chip accelerators like Nvidia's and AMD's is absolutely through the roof, with no clear slowdown in sight. Reports confirm Nvidia's H100 and AMD's MI300 series GPUs sold out across 2024 production cycles, with hyperscale data centers and AI startups.
Okay. So you gave last year's data not so critical. So maybe I'm asking a new question. Jensen Huang sold 500 million in stock. What does inside selling really mean? Right? This is my question.
Jensen Huang selling 500 million in stock isn't exactly what happened. Based on recent reports, he sold about 15 million worth of Nvidia stock in late June, part of a pre-scheduled plan to offload up to 6 million shares by year's end, potentially worth around 865 million. Insider selling, like Huang's, usually means an executive is cashing out shares, often under a 10b5-1 plan, which is set up in advance to avoid insider trading concerns. It doesn't always signal a lack of faith in the company.
Okay, so you are positive with this so-called insider selling news. I agree with you. His selling is just part of the plan, and also Nvidia also did some buyback plan, right? If I'm not. The next question, can Nvidia maintain 6 trillion market cap?
Like Eric Jackson from EMJ Capital have predicted Nvidia could hit a $6 trillion market cap by the end of this year, and they're basing it on Nvidia's continued dominance in the AI market. With growth, there's a solid case for their market cap to keep climbing. However, maintaining that kind of valuation is tricky. The stock's forward PE ratio, sitting around 30 to 36, suggests investors.
There is no obvious, showing slowing down of requirements for AI chips. Okay, so then I'm asking you another question. OpenAI is now. That is my question.
OpenAI shifting to use Google's TPU chips definitely puts a dent in Nvidia's grip on the AI market, but it's not exactly a monopoly breaker. Yet. ChatGPT and cut costs, since Nvidia's GPUs, like the H100, are pricey and tough to snag in bulk. Nvidia still dominates with its CUDA platform and massive data center presence. Competitors are chipping away. Plus, PyTorch 2.0 it easier to move away from Nvidia's software stack.
So you're talking about OpenAI using Google. Maybe I'm asking you something further. How about AMD chips?
Yeah, OpenAI is definitely using AMD chips too. Recent news and posts on X highlight that OpenAI is deploying AMD's Instinct MI300X and MI450 chips for their AI workloads, especially through Microsoft's Azure platform. They're also working closely with AMD on the MI400 series, with Sam Altman himself praising the specs at AMD's events. This move, alongside their use of Google's TPUs and Nvidia's GPUs, shows OpenAI's diversifying to reduce reliance on any single
Okay, so understand. That's why the market is booming, OpenAI using all kinds of products. That doesn't mean Nvidia's product is not popular. Maybe I'm giving you another question. Will China Huawei kill Nvidia's dominance with their new AI chips?
Huawei's pushing hard with new AI chips, like the Ascend 9010C and 9000D, aiming to rival Nvidia's H100. But it's a stretch to say they'll kill Nvidia's dominance anytime soon. Recent reports say Huawei's chips match some of Nvidia's high-end performance, like the H100, and they're making serious headway in China, where US export bans have limited Nvidia's top-tier chips. For example, Huawei's shipped around 200,000 Ascend 9010B chips in 2024 and plans to hit 300,000 in 2025, while Nvidia sold 1 million H2 chips in China last year. That's competitive, but Nvidia's CUDA software ecosystem and global market lead, holding over 80% of AI chip share, give it a huge edge. Plus, Huawei's software lags, and their chips have issues with large-scale model training, like inter-chip connectivity problems. On the flip side, US sanctions have forced China to rely on Huawei, boosting their domestic production.
So generally speaking, Huawei unlikely compete with Nvidia. That's one I agree. Meanwhile, I don't think TSM is able to produce chips for Huawei. That is saying Huawei's chip will be limited to like a 7 nanometers, even more than maybe 10 or whatever. It cannot evolve to like a 5 or 3 nanometers. Am I correct?
Yeah, you've got the gist of it. Huawei's chip production is indeed stuck at 7 nanometers for now, largely because of US sanctions blocking access to advanced equipment like EUV lithography machines from ASML, which are crucial for 5 nanometer or 3 nanometer chips. TSMC, who's already gearing up for 2 nanometer production next year.
Okay, so another question. Why are 35 analysts rating Nvidia a strong buy at all-time highs? That is my question.
35 analysts rate Nvidia a strong buy at all-time highs because of its dominant position in AI and data centers. They see Nvidia's GPUs, like the Blackwell series, driving massive growth, with revenue projected to jump from $26.97 billion in 2023 to over $111 billion in 2025. Despite the stock hitting $158.71, their average price target of around $175 to $177, with some as high as $250, suggests they believe there's still upside.
Okay, then generally speaking, for the coming July, holding or buying more Nvidia, is that still good strategy for long term?
Holding or buying more Nvidia in July could still be a solid long-term strategy. Their dominance in AI chips, with projected revenue hitting $111.3 billion in 2025 and strong analyst support, 35 giving a strong buy rating, points to sustained growth. Despite a high forward PE of around 30 to 36, the AI boom shows no clear signs of slowing, and Nvidia's software ecosystem keeps them ahead. But there's a catch. Short-term volatility from trade restrictions or competitors like Huawei and AMD could shake.
Okay, so then let's talk about short-term. For July, I'm still optimistic about performance of Nvidia. Do you agree with me? That is my question.
Yep, I'm with you there. For July, Nvidia's short-term performance looks promising, driven by strong AI chip demand and the Blackwell rollout gaining traction. Analyst price targets averaging 175 to 177, plus buzz on X about their Q2 earnings potentially topping expectations back that optimism. But keep an eye out. Trade tensions with China or a broader market dip could spark volatility. You still feeling bullish? Want me to dive into anything specific for July?
Thank you. Happy to have conversation with you. Bye bye.